Time now to take a look at the latest business news, and for that I'm joined in studio by Yuka Royer. Yuka, we're going to start, I believe, across in the United States, where a bidding war involving big media companies has got underway.
Well, Eve, the battle is on. Comcast wasted no time after AT&T won the court's approval to buy Time Warner. The US media giant has made a $65 billion all-cash offer to buy 21st Century Fox. That's 20% higher than a deal proposed by Walt Disney, which has bid $52 billion in stock. Fox has already accepted that offer, but its shareholders are yet to vote on the deal. Alison Sargent has more on the media merger frenzy that's taking hold in the United States.
It could be this summer's biggest blockbuster, the bidding war for 21st Century Fox. A drama starring America's leading cable company Comcast, which has made a $65 billion offer to Fox owner Rupert Murdoch. Comcast had been waiting on the verdict of fellow cable company AT&T's bid to purchase media conglomerate Time Warner. The U.S. Justice Department opposed the deal, but a federal judge gave it the green light this week, opening the door to a new age of media mega mergers.
Really now it's a clear highway and green light for Comcast to go aggressively after 21st Century Fox assets. And now it looks like them and Disney are on a collision course vying for those deals.
Fox already accepted an offer from Disney in December, but Comcast is almost 20% higher. A merger would give the cable company the rights to hit Fox shows like The Simpsons, and films including Titanic, Avatar, and the original Star Wars trilogy. Most importantly, it would make Comcast both producer and provider of its content, allowing it to compete with platforms like Netflix and Amazon. Market analysts say the mergers could be a double-edged sword for consumers, bringing both greater content offers and higher prices. 21st Century Fox shareholders are set to give Comcast an answer by July 10th.
Let's check in on the markets now, and shares in Rolls-Royce jumped almost 3% at the open after the company announced a job cut. Rolls-Royce says it plans to cut 4,600 jobs as part of a restructuring plan. The British manufacturer is trying to save £400 million a year by the end of 2020. The announcement comes at a time when Rolls is under pressure in the biggest part of its business, the aero engines unit. Technical issues affecting the compressor unit of its Trent 1000 turbines that is used in Boeing 787 Dreamliners have caused planes to be grounded, leading to flight cancellations. Now let's take a look at the rest of a European market, and major indices are in the red at the open following the US Federal Bank's decision to raise its benchmark interest rate by 1/4 basis point and hinting 2 more rate hikes are likely this year. Earlier, Asian markets were red across the board as well amid concerns over China's economic health. Now turning our attention to global trade, Canada's foreign minister says that Donald Trump's trade actions against the country are illegal under World Trade Organization rules. The comments came after Freeland met with US senators in Washington. She called the US decision to impose hefty tariffs on Canadian steel and aluminium imports on national security grounds absurd, but remained confident common sense would prevail in the end. Relations between the two allies have hit a low after President Trump insulted Prime Minister Justin Trudeau, calling him weak and dishonest after the G7 meeting.
Canada, of all countries in the world, I think we probably have the closest, deepest, most multi-level relationship with the United States. We are, after all, the largest market for the United States. The answer is very simple. The U.S. has to remove these unfair, illegal tariffs from Canada and from its allies.
Donald Trump is also expected to unveil revisions to a list of new tariffs targeting Chinese goods. The US president will meet with his top trade advisors today to discuss details. The new list will likely be slightly smaller than the original, which targeted $50 billion worth of Chinese exports. Meanwhile, China's economy may finally be starting to slow under the weight of Beijing's crackdown on risky lending and factory pollution. A series of new economic data released on Thursday shows that retail sales, investment growth and industrial output all came below forecasts in May. Overall industrial output rose 6.8% year-on-year in May, short of the expected 6.9%. Adding to the uncertainty over economic conditions, China's central bank left its short-term interest rate unchanged against expectations. And that wraps up the business news for now.
Thanks a lot to Yuka Roy there with our business update.